Alright guys, so let's talk about de-dollarization today because this trend is not going to stop. In fact, many countries are beginning to see the benefits of doing so. Now, there are many facets to countries de-dollarizing, and the most commonly discussed here or anywhere is the dumping of treasury bonds. And what do they do with the proceeds? They go and they buy gold. In fact, the value of central bank gold has exceeded their holdings of US bonds. 4.2 trillion in gold bullion versus 3.8 trillion dollars in American debt. And that's the September data. Now the disparity is even greater because gold prices have gone through the roof. This is the dollarization in action, and it's going to continue for the years and for the decades to come. Simply put, countries around the world, they don't just trust the spill coming out of the White House. If the US economy was so robust, there would be no need to sell it so hard on national TV.
We've got GDP now at 3.8%. We've got retail sales year over year up 6%. We've got a capital spending boom. We've got deals like the ones that you've been talking about this morning happening left and right. Inflation, by any measure, has come down by maybe about 50% since President Trump took office. It's headed in the right direction. More importantly, we're having a productivity boom that's unlike anything we've seen since the 90s. And when there's a big productivity boom like that, then that means that you can have growth without inflation. And that's our main expectation right now.
But there's another way to de-dollarize your economy, and this centers around the euro-dollar system. And these are basically dollars circulating the global economy outside the United States. And this is one big massive market. Besides US treasuries, this is one key pillar that's propping up the entire house of cards. It creates demand, and if this vanishes, the dollar strength will plunge hard. There's at least $13 trillion of US currency held offshore in non US banks. But that's just direct deposits. There are trillions more dollars being loaned around the world. So country A could issue a loan denominated in dollars, while country B provides the dollar cash to buy the bond, and it's this connection that China wants to break up. Now let's get this straight. It was never ever going to be that easy, even after Russia's asset confiscation. But ever since Trump started this exact trade war, the aspect of de-dollarization is becoming more and more real today. When your currency starts to fall by 10% in under 6 months, that's a big problem. Countries borrowing in dollars could see their war chest get devalued even further as this trade war continues. Now imagine borrowing $100 million today and getting the spending power of 90 million a year later. Now how's that a good deal? Well, it isn't. Africa is beginning to de-dollarize. Kenya converted a huge chunk of the debt from dollars to the Chinese RMB, and as a result, they saved over $200 million. And these annual savings are very significant. So if the debt lasts for 5 years, Kenya would have saved over $1 billion. This is a critical step for cash-strapped countries in Africa, where every single penny counts. Many countries are weighing the risk of relying too much on the dollar. Just look at Argentina, they have an enormous dependence on the greenback, and that is fueling a big currency crisis. Europe is also filled to the brim with dollar assets, so when the value of the dollar falls, so does the value of the holdings. For Kenya, they still have a clean enough slate to pivot to other currencies. According to their treasury, Kenya actually approached Beijing to convert some of the debt that in dollars to the RMB. As a result, the dollar denominated debt for the railway has been converted to the Chinese currency loan. Now, this is important because China can always take on dollar liabilities of other countries without a hitch. Now, sure, they can't print dollars like the Federal Reserve, but they have a $1 trillion trade surplus with the world. So countries that want to exit dollars and move away can transfer the risk to China. Beijing will be more than happy to help, and this move allows the RMB to circulate more freely around the world. So why would countries prefer the Chinese yuan to the dollar? Thanks to Trump's trade war, China's currency is actually now more stable than the US dollar. Over the last 9 months, the RMB has appreciated by over 2% against the greenback, which is still the world's benchmark. And this allows countries and companies to use their RMB loans without staying in a constant panic mode. Now your billion RMB in loans can sit easy and you can spend it according to plan. Should you have a problem paying back, chances are China will help out and give you a swap line. They'll probably do it to displace US influence even further. Beyond that, Chinese borrowing costs are very low compared to the dollar. If you're a saver or investor, yes, you want higher bond yields. However, if you're a borrower, you obviously want to pay less in interest costs. It's just like shopping around for mortgage on a new home, nothing complex here. Now just take a look at the comparison in bond yields between the US and China. The US 10-year is trading at over 4.1%. The Chinese 10-year, however, is trading below 1.9%. That means you're saving over half in interest costs when you borrow in the RMB. And that's why Kenya is able to save over $200 million annually swapping their dollar debt to the Chinese currency. It's just like a refinancing loan, except chances are your Chinese loan is much more stable than in dollars. Almost every asset class is signaling the destruction of value in the reserve currency. China isn't really doing much here. They're just waiting by the booth for countries to visit. It's not like the Chinese RMB isn't losing purchasing power. Every currency is losing value. It's just that the dollar is losing it even faster. It's just like pushing a piano off a cliff. Take alternative investments like gold or Bitcoin. Now, using a dollar versus these assets in a comparison, we can see there's no floor for the reserve currency. Flipping it around, that means there's no maximum price for real assets as well. Gold, for example, has doubled in price in just 19 months. It's incredible, and it echoes the Nixon shock when the dollar actually decoupled from gold. So it's no surprise why the world has to de-dollarize. It's not really to spite the US, though I'm sure some countries are just doing that, but the real agenda is for their own economic survival. We will continue to see more and more countries shift to RMB borrowing. At the end of the day, it's the strength of the economy that backs up a currency. Now, what is a currency? It's just a colorful piece of paper exchangeable for goods and services of that particular country. And the last time I checked, China was the world's factory. So it makes complete sense to take RMB loans because most likely all your inputs will be coming from China anyways. These are the latest announcements of RMB borrowing since June. We have Panda bonds, Dim Sum bonds, and debt conversion being issued. And the amounts can hit up to 2 billion yuan. But pay attention to the borrowers. These aren't just commercial companies or banks. Sovereign countries and their national banks are issuing RMB debt, and this includes Sri Lanka and Hungary. Right now, the borrowing is concentrated in developing countries, but remember the Chinese grand plan. It is to get a foothold in these regions before their economy and trade undergoes a boom. Beijing is thinking ahead while Trump is still stuck in tariff fantasy land. Now, the longer the trade war drags on, the higher the odds of the dollar remaining weak or recollapsing again. And as trade barriers go up and they stay up, demand for greenbacks fall and stay down. So can the trade war backfire even further on the US? Is there even more downside for the dollar and by extension, further de-dollarization? Well, the World Trade Organization or WTO has something to say about it. According to the body, global trade growth is going to slow down next year thanks to the king of the world. His tariffs have managed to rewrite their own estimate. He has gone from 1.8% growth in 2026 to just half a percent. That's an astounding drop for global trade. That's what happens when you impose punitive tariffs on every nation, including Penguin Island. But who really takes the brunt of the punishment? It's not China, it's not BRICS, and weirdly enough, it's not even Europe. The real victim of Trump's grand plan is the US economy itself. If you're American, it's time to brace for impact in 2026, guys. The delayed effects of the tariffs are coming and could make the stagflation today even worse. Now, all regions in the world will recover more or less by 2026. However, look at North America, which is predominantly the US economy. Imports will collapse by almost 6% a year later. Meanwhile, exports will still be down by 1%. So America will be exporting less to the world and blocking themselves away from affordable imports. Now, what does this do for inflation and employment in the US? Let's use our brains a bit. It drives the former up and the latter down, and that's why the trade war is just so deadly. Now, sure, it looks like the trade deficit might actually come down. After all, your fall in exports is less than the collapse in imports. So technically, you are importing less. However, the collapse in US exports bring forth a big pickle. Now, major US industries are on the brink of collapse or they are already crashing down. And now Trump has to confront a very difficult problem. He has to crank up massive subsidies for various industries, but that would mean more debt and deficits, definitely bad news for the dollar. Or he can watch critical sectors like US farmers literally circle the toilet bowl, and that could be even worse for the overall economy. It's a lose lose situation. There's no out here.
I need a market. I need a place to sell this stuff. I can work hard enough and make a product. If you give me some place to sell it, I'll take care of myself. I mean, the farmer can't continue to produce a crop below the cost of production, and that's where we're at. And we don't have anywhere to sell it. We're in a tariff war with China. We're in a tariff war with everybody else. I mean, where do they want me to market this stuff?
And that's why you can't win a trade war, even if you're the biggest instigator of it. You are not bigger than the global economy. The US economy and its financial system is already on a very shaky foundation to even wage it in the first place. You have a broken supply chain and a mountain of debt just ready to collapse. Now, in 2024, the US government racked up an insane bill. Deficit spending hit $1.8 trillion, and this is money borrowed into existence to fund the economy. Sooner or later, the amount will have to be paid back plus interest. But because of Trump's trade war, every category of spending is going to fly to the moon. It isn't just interest payments or social security. Now we have a new headache on our hands. Trump will have to subsidize more US industries like US farmers, whether he likes it or not. Now, you can call it a bailout or you can call it a helping hand, but the mechanics are still the same. Scott Bessent will issue more treasury bonds to borrow the money, and that will compound the national debt and lower trust in the USD even further. The trade war is backfiring in real time. Now, everything hinges on the reserve currency. The longer this trade disaster goes on, the more countries will rebel against the current order. Confronting the US, as we all know, is still impossible. So the next best thing is to move away financially from Trump's economy. There's no U-turn left, all the bridges have been burnt. But let me know what you think. Will countries continue dumping their dollar loans for RMB? And how bad will US trade collapse in 2024? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.